Welcome to CryptoSafe. In today's video, we are going to be talking about the risk ratio of Monero and Bitcoin. We will also be covering the latest Monero and Bitcoin new updates as well. So if you aren't already a part of our family, we will be delighted if you join us by hitting the like button, subscribing to the channel, and pressing the bell notifications so that you never miss out on any new updates from us. Also, make sure to leave us a comment on our views about which one is a better investment. Also, don't forget to like, subscribe, and comment because we are giving away $20 for a random person who will like this video. At the end of the month, we will announce the winner. Cryptocurrencies have increased their dimensions to various other spaces. However, when talking about cryptos, the first thing that pops into the minds of any individual is the risk behind investing in cryptos. People believe in investing in Bitcoin more because of its high fundamental value. The token is not volatile as compared to other cryptos. With this, let's make a comparison between Bitcoin and Monero and determine whose risk ratio is the lowest. Recently, we have seen an immense increase in the popularity of cryptocurrencies, given that the cryptos are upgrading themselves every now and then to make their blockchain even more presentable and apt for the upcoming investor generation. These virtual or digital currencies that are decentralized can be used to trade, and some are built to mimic the US dollar. Some of them are built with the aim to enhance privacy and anonymity, and whether they achieve success is impulsive. A number of these currencies allow all transactions to be seen by the public, while others make privacy optional. Others, on the other hand, make the privacy feature completely implicit. Well, the first thing that we believe while we think about cryptocurrency is Bitcoin.
I'll buy some Bitcoin.
The first ever cryptocurrency and the largest crypto as well. This currency was the first one of its kind, which uses peer-to-peer technology to allow users to make payments with their coins. However, it's not Bitcoin now. There are several other cryptocurrencies that have taken place after this token and are extremely likable. There is another crypto that has also achieved a high level of popularity and acceptance. This token is stealing many hearts due to its privacy-oriented features. This is the Monero coin. Not many know about this token, maybe because the social media presence and celebrity promotion are a bit less for this one. However, analysts expect this token to gain Bitcoin standard to popularity in the coming years for Monero. Let's dive a bit more into this token. Monero is an open-source, privacy-oriented cryptocurrency launched in 2014. It is based on the concept and runs on it. These blockchains, which are the foundation of digital currencies, are public ledgers of participants' activity that display all of the network's transactions. Monero's blockchain has been designed to be as opaque as possible. By masking the addresses used by participants, it makes transaction details, such as the identity of senders and recipients, as well as the amount of each transaction, anonymous. With anonymity, the mining process for Monero is based on an egalitarian concept. This principle talks that all people are equal and they deserve equal opportunities. When Monero was first released, its creators did not keep any of the virtual money for themselves, instead of relying on contributions and community support to help the virtual currency grow.
Sounds promising.
Let us now look at the price of Monero and Bitcoin and compare their risk ratios. Monero is currently trading at $234.89 with a RED of 1.43%. The present price of this token is trading in its support levels. Apart from this, the token recently got rejected after hitting its highs, and the present consolidation is an outcome of the rise. Coming from Monero's price volatility and the risk factor, the token is distinctively showcased a wide and visible price variation starting from its first day of trading. On 20th December 2017, the token hit its all-time high at $469, showcasing a change of 993.77% from its starting price range. After which, in 2021, the token rose again towards its all-time highs at $485 on 9th May 2021, after which the token fell to its current levels. Given this history, it is notable that this token does showcase a heavy price rise, indicating a higher scope of movement. Monero showcased an increase of an all-time high of 127% increase. The price variation on this token is periodical. However, if there is an increase or decrease, the impact is much higher. Most of the time, Monero is seen to be trading sideways, gathering strength to travel to yet another high. In this case, Monero's volatility currently is much higher than what it was a month prior. The current volatility of this token is standing around the range of 40%, and the Sharpe ratio that measures the excess returns which are due to smart investment decisions on Monero is at 0.7. A Sharpe ratio standing somewhere between 0 to 1.0 is considered to be suboptimal. The higher a token's risk ratio is, the better its risk-adjusted performance.
Risk all. We win everything.
Given a 3-month investing horizon, Monero appears to be exceedingly risky. Monero has a Sharpe ratio of 0.0507, which means that over the last 3 months, the digital coin has returned 0.0507% per unit of risk. Our approach to calculating a cryptocurrency's volatility is to combine all accessible market data with crypto-specific technical indications that cannot be dispersed away. We discovered 21 technical indicators for Monero that you may use to assess the coin's future volatility. Please verify if Monero's risk-adjusted performance of 0.0665, downside deviation of 6.06, and mean deviation of 3.98 are in line with your expectations.
Expect the unexpected.
Systematic market risk and unsystematic non-market or company-specific risk are the two forms of risk that most traded shares face. Unsystematic risk refers to the possibility that events unique to Monero or the blockchain sector will have a negative impact on the stock's price. This type of risk can be mitigated by investing in a number of different stocks from various industries with low correlations in stock prices. Systematic risk, on the other hand, is the danger that the price of Monero will be affected by broader stock market movements and will not be diversified away. As a result, no matter how many holdings you have, market risk cannot be eliminated. You can, however, look at a Monero stock's history response to market moves and decide whether or not you want to buy it based on its volatility direction. Beta and standard deviation are two often utilized metrics to aid in decision-making. Now let's look into Bitcoin's price volatility. If you think Bitcoin is one of the safest and non-volatile assets in the cryptocurrency market, well, my friend, you are not quite right.
You are wrong.
Bitcoin has seen its biggest drop for a month during the recent market crash. However, because Bitcoin has already achieved a particular level of trading, the token's volatility has reduced compared to Monero. However, even then, Bitcoin is volatile. Bitcoin's reserve risk indicator, which is now at 0.008, assesses the risk-reward ratio of an investment based on long-term investors' confidence relative to the price at any given point in time. According to blockchain analytics group startup Glassnode, this is much below the highs of 0.02 recorded during the bull market manias of December 2017, December 2013, and June 2011. The current low degree of confidence shows that sentiment remains high in relation to the cryptocurrency's price. Even after the cryptocurrency's 6-fold increase in the last 5.5 months, the risk or reward is skewed positively. According to Glassnode, reserve risk is calculated by dividing Bitcoin's price at any point in time. Each day a coin is held, the owner defers the ability to exchange it for cash value. It is also rumored that Bitcoin is expected to increase its fundamental value by the end of 2021. Also, the risk-reward ratio will be deemed to be unattractive once the indicator hits the red zone above 0.02. The Monero team is well known and active in crypto media. Besides the risk ratio analysis, our confidence lies more with the Monero team than the Bitcoin team, which is unknown and not developing as much as Monero. When whales and institutions step in, you should be looking into a different direction. If you invest in Bitcoin, your money might be at more risk. For Monero, your money is in the hands of the market. However, in terms of investment, even though Bitcoin is a much safer investment, the token's scope or room of increment is much lesser than that of Monero. Furthermore, given the historical trading pattern of Monero, the token rises extraordinarily after completing a certain price trajectory, meaning if a smart investment is made there, the person is likely to become a millionaire with Monero. However, the same might not be fulfilled by Bitcoin.
Well, that's a shame.
Yes, and that was all for today's video. It was a bit technical, however, we believe you must have taken something from it. If you enjoyed watching this video, make sure to have dropped a like, subscribe to the channel, and hit the bell icon to get notified every time we upload a new one. And we will see you all at our next one. Goodbye.